The Keltner channel was first introduced by Keltner in the 1960s. The original formula used simple moving averages, SMA, and the high-low price range to calculate the bands. In the 1980s, a new formula was introduced that used average true range, ATR. The ATR method is commonly used today. 1. The Keltner channel is a volatility-based technical indicator composed of 3 separate lines. The middle line is an exponential moving average, EMA, of the price. Additional lines are placed above and below the EMA. The upper band is typically set 2 times the ATR above the EMA, and the lower band is typically set 2 times the ATR below the EMA. The bands expand and contract as volatility, measured by ATR, expands and contracts. Since most price action will be encompassed within the upper and lower bands, the channel, moves outside the channel can signal trend changes or an acceleration of the trend. The direction of the channel, such as up, down, or sideways, can also aid in identifying the trend direction of the asset. Keltner channel methods. Keltner channels have multiple uses, and how they are used will largely depend on the settings a trader uses. A longer EMA will mean more lag in the indicator, so the channels won't respond as quickly to price changes. A shorter EMA will mean the bands react quickly to price changes but will make it harder to identify the true trend direction. A bigger multiplier of the ATR to create the bands will mean a larger channel. The price will hit the bands less often. A smaller multiplier means the bands will be closer together and the price will reach or exceed the bands more often. Traders can set up their Keltner channels any way they like, with the following potential uses in mind. The angle of the channel helps to identify trend direction. A rising channel means the price has been rising, while a falling or sideways channel indicates the price has been falling or moving sideways, respectively. A price move above the upper band shows price strength. This is another indication that an uptrend is in play, especially if the channel is angled upwards. A drop below the lower band shows price weakness. This is evidence of a downtrend, especially if the channel is angled downward. If the price is continually hitting the upper band, but not the lower, when the price does finally reach the lower band, it could be a sign that the uptrend is losing momentum. If the price is constantly hitting the lower band, but not the upper, when the price does finally reach the upper band, it could be a signal that the downtrend is near an end. The price may also oscillate between the upper and lower bands. In cases like these, traders may use the bands as support and resistance. They may look to buy when the price reaches the lower band and then starts to move higher again, and may look to sell or short after the price starts to fall again after reaching the upper band. After a sideways period, if the price breaks above or below the channel and the channel starts to angle the same way, that may signal that a new trend is underway in that breakout direction. What is the Keltner channel indicator? The channel-based indicator, which is similar to Bollinger Bands, Donchian channel, etc. This means that it has upper and lower bounds that help us identify potential overbought and oversold levels. Charles Keltner first described the indicator in 1960 in his book How to Make Money in Commodity Markets. The first version of the channel used a special modification of the moving average. In 1960, Linda Raschke modified the indicator, which now uses the ATR indicator to determine the channel width. Further, trader Robert Colby suggested using an indicator with an exponential moving average. It is this version of the indicator that we will consider. The difference between the Keltner channel and the Bollinger Band indicator lies in how the channel lines are calculated. The Keltner channel uses the average true range, and the Bollinger Bands use the standard deviation. If you compare them, you will realize that the Keltner channel shows smoother lines than the Bollinger Bands. How to use the indicator? You shouldn't go short just because the price is on the upper channel. Because in a strong uptrend, the price can remain overbought for a long period. The opposite is true for a downtrend. The price usually changes its direction when it reaches extreme values in the market structure. For example, the price reaches support or resistance levels. We need to find a price that is far beyond the Keltner channel. This suggests that the market is at an extreme level, as far as possible from its average value. However, do not rush to open a long position here. As we already know, in a strong downtrend, the price can stay near the channel's lower border for an